Have you ever wondered why you keep making the wrong decisions even when you have all the market information? Is it just a lack of a system, or is it your mindset? This question shakes every person who looks at trading only from a technical analysis perspective, but ignores the psychology of their own thoughts. This journey takes you into the depths of this psychology, which is not just a book, but an experience that can change your way of thinking. Chapter 1, Part 1. Every trader believes they just need a perfect system that will give signals, tell them a strategy, and automatically bring in profits. But the truth is, 90% of trading success depends on your mindset and only 10% on your method. Think about it. Why do two people look at the same chart and make different decisions? Why does one person get nervous seeing the same opportunity while the other confidently enters the trade? The answer is the difference in perception and belief systems. We all interpret the market according to our experiences, wins, losses, and conditioning. This interpretation drives our emotions, decisions, and actions. The author makes a very important point here. The market doesn't hurt you. Your inability to deal with uncertainty does. The market is just a neutral space where possibilities exist at every moment. But when we crave certainty, we create problems. When we want to turn every trade into a win, we become rigid. And a rigid trader can never be a consistent trader. So what's needed for consistency? First, a mindset that can accept uncertainty. Second, a belief system that sees every loss not as a failure, but as a feedback. Third, an awareness that gives you the knowledge of how to think above your thoughts and emotions.
Here, the author says something that is the foundation of the whole book. Thinking in probabilities is the key to long-term success. This means think of every trade as an independent event, like a coin toss, where it can be either heads or tails. You can only ensure that you've tossed the coin correctly, i.e., followed the system. What the outcome was is not important. If your edge works, then in the long run, you will win. Now, the real game begins when you start seeing a trade as a trade, not as an extension of your ego, fear, or hope. So it's important that you test your every belief. Do you really believe that you have no control over the outcome of every trade? Can you naturally accept the loss, or do you break down inside? Do you ask yourself, did I do the right thing or the wrong thing? Or do you ask, did I follow my system or not? This is the difference between an amateur and a professional trader. The professional's focus is on execution, not the outcome. Because the outcome is a probability, but execution is your responsibility. Now, how to apply this to real life? First, before opening the chart every day, ask yourself a question. Will I try to control the outcome today or the process? Second, keep a trading journal where you write not just numbers, but your feelings, doubts, and reactions. Third, adopt a mantra. I don't know what the future holds, but I don't know what I need to know to make money. These three things will slowly rewire your thinking, and when your thinking changes, you start seeing the market not as a battlefield, but as a playground, where every step is an opportunity, not a threat. So if you really want to get into the zone in trading, that place where decisions are natural, emotions don't bother you, and a flow is maintained, then this journey begins by understanding yourself, because the market will not change you until you change yourself.
Chapter 1, Part 2. When you think of trading as just a mechanical activity, you lose the depth that brings true skill. The author says that most traders cannot be consistent for this very reason, because they have never challenged their inner beliefs. They change technical indicators, they change strategies, but they don't change their way of thinking. This is part of the ego, which thinks that if we are wrong, our value will decrease. But in the market, this thinking leads to self-destruction, because only those who trade with flexibility survive, not with perfection. The second is the fear of loss. Our brain naturally tries to avoid loss. But the irony is that in trying to avoid this fear, we make the loss even bigger. We move our stop loss, hold on to trades, and hope that some miracle will happen. But hope is not a strategy. The third is overconfidence after a winning streak. When a few trades go well, we start thinking that we know everything. We ignore the rules, trade with a larger size, and think that the market will reward us. But the market gives nothing to anyone. It's just a mirror that shows you who you are. So what's the solution to this? The author says we have to develop a neutral mindset. A mindset where we are neither afraid of loss nor carried away by the joy of winning. Where we see every trade as a new opportunity, without any baggage, without any emotional pressure. The biggest advantage of a neutral mindset is that you can stay in the present. You are not afraid of any past loss and are not carried away by the desire for future profits. You just focus on that one trade, that one moment where the real power lies. Now, to develop this mindset, the author talks about some deep techniques. Mental rehearsal. Before every trade, imagine that you are calmly following the system. You are also dealing with a loss, but you're not breaking down. This practice prepares your subconscious mind. Affirmations. Say to yourself every day, I am a disciplined trader. I follow my rules without fear or hope. These simple sentences keep you centered. Desensitization. When you repeatedly deal with a situation neutrally, its emotional pressure decreases. For example, repeatedly dealing with small losses so that their fear goes away. And in the end, the author talks about a very powerful concept, understanding edge and certainty separately. Many people think that if I have an edge, I will win every time. But edge doesn't mean certainty. It means that the probability is in your favor. Your job is to work consistently with the edge and then leave the outcome to the market. This is the real meaning of probability thinking. Your strength is not in how much you can predict, but in how mentally stable you can be in an unpredictable environment.
So if you really want to get into trading in the zone, you first have to unlearn yourself. You have to let go of all those beliefs that give you the illusion of control. And then you have to adopt a new way of thinking, which is full of freedom, flexibility, and awareness. Because consistent trading is not a strategy, it is a transformation. Chapter 2, Part 1. One line that captures the entire depth of this chapter is, the best traders are not afraid, not because they don't lose, but because they completely accept the loss. Think about it. When does fear come? When you want something specific to happen, but you don't believe that it will. This is what happens in trading too. When you want to win every time, but you know that winning every time is not possible, then fear is born. And this fear starts controlling your actions. You overanalyze, you miss entry points, you book profits too early, or you don't have the courage to stop the loss. The author breaks a big misconception here. Good traders are not those who don't lose, but those who accept losses as if they are breathing. That is, they are not emotionally attached to the loss. They don't take it personally. They consider the loss as part of the system. Now connect this to your life. When you took a bad trade and there was a loss, did you just lose money, or did you also feel self-doubt, guilt, and frustration? Actually, we don't feel as sad for the loss as we do for the thoughts and feelings associated with that loss. I am stupid. I knew, yet why did I do it? Now I will not make this mistake again. But when these emotions get frozen inside, they make our future decisions bad too. The author calls this emotional baggage. That is, those unresolved emotions which remain in our subconscious mind and interfere with every upcoming trade.
So now the question is, how to get rid of these emotions? First, self-forgiveness. You have to tell yourself,
I made the decision with my best understanding at that time. If it turned out to be wrong, it was a lesson, not my failure. Second, emotional awareness. Every time you trade, observe the thoughts going on in your mind. Are you going in due to fear or with clarity? Are you trading for revenge or for an opportunity? Third, rebuilding confidence through structure. Confidence doesn't just come from successful trades. It comes from a solid routine, practice, and repeated execution. Every time you follow your rules, even after a loss, your brain understands that you can maintain control over yourself, and this is the real confidence. Now, the author brings in another deep concept. You don't trade the market, you trade your beliefs about the market. That is, the market is one for everyone, but every person sees it through their own lens. To someone, the same candle seems like a breakout, to someone else, a fake out. To someone, the same level seems like support, to someone else, a trap. That is, we interpret the market according to our mindset. So if your lens is filled with fear, doubt, or greed, then no strategy can be consistent for you. So the author says, first, clean your lens, then look at the chart. And the way to clean this lens is to consciously change beliefs. Now, how to practice this? Every time a strong emotion arises, stop it, observe it, label it, and ask, is this emotion coming from old experience or from the current chart? Say an affirmation every day. I am open to experiencing the market as it is, as I am afraid or as I hope. After every trade, don't just look at the profit loss. See how much emotional skill you showed in that trade. Your goal is now not just to make money, but to be the person who can be stable even in uncertainty. And when you reach this position, you are truly in the zone in trading.
Chapter 2, Part 2. Every trader has at some point felt, I know everything, yet why am I losing? This question leads us to the fact that the game of trading is not of information or technical knowledge, but of awareness and discipline. You can know a strategy, understand all its rules, yet if you can't apply it consistently, you will not benefit. The author says that the biggest reason for this inconsistency is internal resistance. This is the resistance that prevents us from entering. Now the question is, where does this resistance come from? The answer is from past emotional pain. Every time you endured a loss and accepted it as an emotional wound, your brain planted a seed of security. The next time a similar situation comes, the subconscious mind activates that fear again. That is, our brain is not saving us from loss, but from the pain that we felt the last time. So, the trader who cannot stop themselves is not suffering from a lack of strategy, but from a lack of internal healing. The author comes to a great point here. You can only be consistent when your actions are in alignment with your beliefs. If you have the belief that trading is risky and losses are painful, then no matter how much you consciously try to maintain discipline, your actions will still be inconsistent. So it is important that you reprogram your beliefs. Now let's talk about the three-step process of this reprogramming. Identify. First, identify which beliefs are holding you back. For example, if I lose, I will be proven stupid. Or, I am a good trader only when I'm making money. Challenge. Now question them. Does this belief make me strong or weak? Is it true or just a story created after an experience? Replace. Now put a new affirmation in place of the old belief. I see loss as a learning opportunity. I am a disciplined trader, and my value depends on execution, not on the outcome. Here the author talks about a powerful exercise. For 5 minutes every day, imagine the trader you want to be. Imagine that you are calm, focused, and process-driven. This visualization creates a new neural pattern in your brain, which eventually starts to become your reality.
The author also says that most people think of trading as an external game, but the real victory is when you win over yourself. when you act despite fear, when you stay centered even after a loss, when you make decisions confidently even in an uncertain environment. Now, let's talk about some real-life applications that will help you adopt this mindset in daily trading. Pre-trade routine. Before every trade, take 3 deep breaths and say to yourself, I have control over the process, not the outcome. Risk per trade limit. Set an amount that if it goes away, your emotions will not be disturbed. Post-trade reflection. After every trade, just ask, did I follow the rules? If yes, then it was a successful trade, no matter the outcome. In the end, the most important lesson of this chapter is, the market is a mirror. It shows you your true self. It tests your psychology, not your strategy. So, the next time you are on the chart, don't think about what the market will give you, but think about how you will react to the market. Because that reaction determines whether you are a struggling trader or an evolving trader. Chapter 3, Part 1. You must have often felt that the market seems like a puzzle. Sometimes strategies work, sometimes they don't. Sometimes patterns are followed, and sometimes they go in the opposite direction. And in this confusion, we assume that maybe the market is random. And this thinking makes us mentally exhausted. But the author says, the market is not random. We are just not consistent enough to understand and follow its rules. In the market, there is an interaction between buyers and sellers at every moment. And this interaction works like a probability, not like a certainty. This means that any setup gives you an edge, a probability that the price will go in your direction. But that probability does not mean a 100% win, but a statistical advantage. The author repeats this point over and over. You can be wrong and still make money, and you can be right and still lose money. The straight meaning of this is, you cannot determine whether the decision was correct from the outcome. You have to see what process you took that decision from.
Now, the biggest mistake of a trader is that he links the outcome of every trade to his self-worth. If there is a profit, I am smart. If there is a loss, I am a loser. This connection makes the trader mentally unstable. The author says a mind-blowing concept, random outcomes in a non-random environment. That is, the market is a structure where the outcome of every trade can be random. But in the long run, if your strategy is correct and there is disciplined execution, then the outcomes will be predictable. It is very important to understand this, because when you know that the outcome is random, you are not emotionally attached to it. And when you keep your execution rule-based, you trust the system. Now, let's talk about how to make this mindset practical. Develop a statistical mindset. Every strategy has a sample size behind it, of 50, 100, or 200 trades. Understand its win rate, average loss, and average profit. Then trust it. 1 or 2 losses do not invalidate the strategy, just as 1 missed shot does not make Sachin a bad batsman. Maintain a trade log. Write not just the price or entry of every trade, but also your thoughts. Why did you enter? How did you feel? What was the reaction after the trade? This will help you understand your emotional patterns. Reward the process, not the profit. Every time you follow the rules, mentally reward yourself. Tell yourself, I showed discipline today, and this is my real profit. Develop outcome neutrality. No matter the outcome, the reaction to it should be neutral. Learn to react the same way after a loss or a profit. This will make you see the market not as a battlefield, but as an observation lab. Now a question. If there is no certainty in the market, then how to trade? The answer is probability mindset. That is, understanding that every trade is like a coin toss in your favor, but you try to toss the coin in the right direction every time. Your goal is not that every prediction will be correct, but that when the edge is found, you will execute it with confidence.
The author also explains that a confident trader is one who is not afraid of the outcome. He knows that the system works. He knows that some trades will win, some will lose, but if he sticks to the process, he will win in the end. The end of the chapter ends with a very deep saying. Success in trading is not about predicting the future. It's about aligning yourself with the present reality of the market. That is, the more you merge with the current situation of the market, the more you are in the flow in trading. And this flow, that zone, takes you from an average trader to a great trader. Chapter 3, Part 2. In this chapter, the author takes us to that mental darkness that is in almost every trader, the conflict of expectation versus reality. As soon as you enter a trade, a result is already set in your brain. Maybe you thought that this trade will give at least 2% profit, or that this resistance will break and go up. Now the problem comes when the market does not behave according to that expectation. You see that the price is going sideways or in the opposite direction, but since your brain has become attached to the outcome, you ignore reality. The author calls this trading what you want to see instead of what is. That is, you're trading the shadow of your hopes, not the market situation. This bias does not let you stop. You increase the stop loss, try to save the trade by averaging down, or ignore the loss thinking it is a temporary drawdown. Actually, all of these are defense mechanisms which try to protect you from reality. But the irony is that these very things cause you the most harm. So now the question is, how to remove this bias? The first step is to detach from the need to be right. You have to understand that winning is important in trading, but being right is not necessary. You can be right from a strategy point of view, but still the market can give you a loss. This does not mean that you are a bad trader, but that you are respecting the system.
The second step is constant reality check. Every 15-20 minutes, ask yourself, is my trade still according to my rules? If not, then leave by putting your ego aside. The third step is process-based reward system. Your brain accepts new habits only when it gets a reward. So whenever you make a neutral exit, whether it is a loss or a break-even, consciously reward your brain. Think, I followed my discipline this time, and this is the path to long-term profit. Now, another powerful concept comes: disrupting incapacitating beliefs. The author says that any belief that makes you fearful, doubtful, or emotional, challenge it openly. Example, belief: if I don't get out early, the profit will go away. Counter: the market gives infinite opportunities. I should not make decisions out of fear. Belief: I endured a loss last time. It will happen again this time. Counter: every trade is a new situation. It is not necessary to repeat old experiences. The more you verbally and counter respond to these limiting beliefs, the more clarity and calmness will increase in your brain. In this part of the chapter, the author gives us a mantra that can guide every step of trading. Observe, don't absorb. That is, look at the market, interpret it, but don't drown in it. Not in fear, not in greed. You are an observer, not an actor. To get into this observer mode, follow these practical steps. Breathing anchor. Take 3 deep breaths during the trade to neutralize yourself. It keeps you stable in the present. Mental checkpoint. Take a 5-second break before every decision and ask yourself, am I looking at this trade with clarity or am I being driven by some emotion? End of day review. Review not just the chart, but also your thoughts and reactions. Did you enter emotionally? Were you chasing a reward? The more you practice this awareness, the more your emotional noise will decrease. And when the noise decreases, clarity increases on its own. In the end, the biggest lesson of this chapter is, to win in the market, it is not necessary to read the charts, but to read your reactions. The nature of the market will remain random, but if your reaction is disciplined, then that reaction will lead you to consistent success.
Chapter 4, Part 1. We are now going to see the real meaning of confidence. Many traders think that confidence comes when you have a winning streak or when you have been profitable for a long time. But the author completely opposes this. His belief is that true confidence comes when you know yourself and yet believe in yourself. Now, a great question arises here. Can you still believe in your trading decisions even when the outcome is against you? Can you stay anchored in the process when there is noise, volatility, and your brain is filled with fear? The author says that this is the real confidence, outcome-independent confidence. When confidence is only attached to profit, it is fragile. One loss breaks it. But when confidence comes from the system and self-awareness, it lasts. Now, how to build this confidence? The first step is honest review of your experience. Don't ask yourself how much money you made or lost, but ask what you learned. Every trade is an opportunity to understand yourself. Every decision is a mirror that can show you your inner fear, greed, or ego. The second step is deliberate practice. Confidence comes from practice, but from the right practice. Every time you follow the rules, every time you believe in the system, confidence gets stronger inside you. This confidence comes not from small wins, but from disciplined execution. The third step is creating emotional boundaries. When you criticize yourself after a loss, or consider yourself superior after a profit, you are making your confidence dependent on outside recognition. So it is important that you stay neutral. Do not create a broken identity from a loss. Do not create an inflated ego from a profit. Now, a very important point comes here. External noise versus internal clarity. Nowadays, every trader is surrounded by thousands of sources. Someone on Twitter is saying that the market will crash. Some indicator is showing a bull run has come. Some news is spreading panic. If you start defining yourself with these external signals, then you become reactive. The author says you cannot build confidence in your edge if you are always seeking confirmation from the outside. This means learn to verify your strategy and setup yourself. Draw conclusions from your own backtesting, journaling, and observation. Only then can you become an independent thinker, and from there, true confidence will be born.
Now another powerful concept comes: authenticity versus perfectionism. Many traders, in trying to become a perfect trader, overanalyze every trade, avoid risk, and delay execution. The author clearly says here, perfection is fear in disguise. When you try to be perfect, you start to fear failure so much that you don't even act. Instead, you have to be authentic, that is, accept who you are and start growing from there. If you are a beginner, don't consider it a weakness. Consider it clarity that you still have to learn. If you are not disciplined, don't lie to yourself. By accepting this truth, you can become better. Confidence comes when you can see your flaws and yet move forward. The author in this chapter repeats a key message over and over. Confidence is a choice, not a reward. Before every trade, you can be confident because you have followed the process, not because you are relying on the guarantee of the outcome. This mindset can improve not just your trading, but your whole life. So the next time you are in front of the chart, tell yourself, I am trading based on my discipline, not on any prediction. This thinking will make you from an amateur to a professional trader. Chapter 4, Part 2. The author says that you cannot become a professional until you take complete responsibility for every one of your trades. Now think, when a trade goes against you, what comes to your mind? The market went in the wrong direction. The breaking news ruined everything. It didn't fill properly because of the broker. Or someone didn't explain it to me correctly. All these words sound familiar, but these are the subtle excuses that hinder your progress. The author breaks an illusion and says, do you want to be a good decision maker, and do you want to gain mastery over your emotions? When this purpose becomes crystal clear, you rise above all confusion. You are not afraid to break the rules, but you have respect for yourself that you have made the rules. And this self-respect strengthens discipline. This chapter ends with a powerful realization. The next time you're about to take a trade, stop for a moment and ask yourself, am I ready to take complete responsibility for this decision? If the answer is yes, then believe me, you have reached a new level in the world of trading.
Chapter 5, Part 1. In this section, the author reveals the invisible force that pushes most traders towards continuous losses no matter how good their strategy is. This force is the influence of belief on our perception. The author states that what we see depends entirely on the lens through which we interpret the market. This lens is created by our beliefs. For example, if someone believes that making money in the market is difficult, they will subconsciously be filled with fear and hesitation no matter how good the trading setup in front of them is. But if someone believes that every day is a new opportunity, they will look at the charts with an open mind and clarity. Now, do you think these two people will interpret the same price chart in the same way? Absolutely not. And this difference is what defines their results. The author makes a profound statement here. You don't trade people. You trade for your value system. This means the market is one, but each trader trades it according to their own value system. There is no absolute truth or unchanging information here. Rather, these are the filters we have created from our experiences, conditions, and recurring thoughts. The good news is that beliefs can be changed. Now, let's talk about the process of identifying and changing beliefs. Step 1. Awareness. Don't just write your entries and exits in your trading journal. Also write down the thoughts that were in your mind at the time. I felt the market was going to fall. I was afraid of losing the profit. I didn't believe this setup would work. These will bring your core beliefs to the forefront.